For decades, we were told that the safest path to wealth was to work hard and park our cash in a traditional savings account. I followed that rule religiously until I looked at the math and realized that saving is actually a slow way to lose everything. In 2026, the global economy moves at a speed that traditional banking simply cannot keep up with. When you leave $1,000 in a standard account, inflation acts like a silent thief. If inflation is at 5% and your bank pays you 0.5% interest, you are effectively losing 4.5% of your purchasing power every single year. You aren't saving money, you are storing a melting ice cube. I stopped saving because a savings account is not a vault, it is a trap for people who are afraid of growth. The psychological comfort of seeing a number in a bank app blinded me to the reality that my money was dying. To the banks, your savings are a cheap loan they use to make 10 times more profit while giving you back crumbs. I realized that the safety I was buying was actually the greatest risk of all. The risk of reaching retirement age with a pile of cash that can no longer buy a loaf of bread. This realization changed my entire philosophy. I moved from a defensive mindset to an offensive one. Instead of hoarding paper currency that the government can print at will, I started looking for assets that have true scarcity. Money is a tool for movement, not a trophy to be kept in a cage. By stopping the habit of traditional saving, I forced myself to learn the language of the wealthy, the language of velocity. Once I stopped saving, I redirected every extra dollar into what I call money soldiers. In my new system, I don't want a pile of money. I want a stream of money. I shifted my focus entirely toward cash-flowing assets that provide monthly or quarterly distributions. This includes high-yield dividend stocks, rental properties, and private credit funds. The goal is simple. Instead of having $10,000 sitting idle, I want that $10,000 out in the world working 24 hours a day to bring back another $500. I look for assets where the underlying value grows with inflation while the payout provides immediate liquidity. This creates a wealth flywheel. When an asset pays me a dividend, I don't spend it. I immediately use it to buy more of that asset. This is how you achieve true financial gravity. Most people wait until they have $1 million to start living. But by focusing on cash flow, you can start buying back your time much sooner. Even a small asset that pays you $50 a month is more valuable than a savings account because it represents a bill that is paid forever without you lifting a finger. I treat my capital like a business. Every dollar is an employee, and if an employee is just sitting in a savings chair doing nothing, they are fired. I moved my capital into diversified ETFs that track the top 500 companies and into decentralized finance protocols that offer yields far above what any traditional institution could dream of. This shift transformed my net worth from a stagnant number into a living, breathing machine that grows regardless of whether I am at my desk or on vacation. The third pillar of what I do instead of saving is aggressive reinvestment into my own skill stack. In the modern economy, the greatest hedge against a market crash is your own ability to generate income from thin air. I take a significant portion of what used to be savings and spend it on high-level coaching, specialized certifications, and deep-dive masterminds. If you have $10,000, putting it in the stock market might net you an 8% return, giving you $800. But if you spend that same $10,000 to learn a high-value skill like AI integrated financial analysis or advanced digital sales, you could potentially increase your annual income by $50,000 or more. That is a 500% return on investment, which is impossible to find in any public market. I stopped saving because I realized that my brain is the most undervalued asset in my portfolio. Information in 2026 is abundant, but organized, actionable knowledge is rare. By investing in myself, I make my earning ceiling non-existent. Wealthy people do not save to get rich. They invest in their capacity to provide value to the marketplace. When you have skills that the world needs, you are recession-proof. You don't worry about the price of gold or the volatility of crypto because you know you can always trade your expertise for currency. I spent years saving pennies while stepping over dollars. Now, I spend thousands to stay at the cutting edge of my industry, knowing that one right connection or one new skill will return that investment 10 times over within a single year. The final shift was purely psychological. Saving is rooted in a scarcity mindset, the fear that there isn't enough and that you must protect what you have at all costs. What I do now is practice wealth velocity. This is the understanding that money must flow to grow. Think of money like water. When it stays still, it becomes stagnant and toxic. When it flows, it stays fresh and creates life. I keep a very small opportunity fund in liquid cash, just enough for 3 months of expenses, and everything else is pushed back into the market or my business. This keeps me lean, hungry, and focused. Because I don't have a massive safety net sitting in a bank, I am forced to stay sharp and ensure my investments are performing. This active relationship with my finances has made me a much better investor. I am constantly scanning for undervalued opportunities and shifting capital from low-performing areas to high-performing ones. Instead of checking a bank balance to feel safe, I check my return on capital and my time to freedom metrics. This approach requires more discipline than a savings account, but the rewards are exponentially higher. By the time most people realize their savings have been eroded by the changing economy, the people who practice velocity will own the assets that the rest are struggling to afford. I don't want the security of a bank's promise. I want the certainty of owning productive assets and elite skills. This is the blueprint for the top 10% in 2026. We don't save for a rainy day. We build an infrastructure that thrives regardless of the weather. Stop hoarding currency and start building a kingdom of assets.